Hello and welcome back to the Chart Wrap by True Options Masters. I'm Mike Merson, your managing editor, and as always, we are here to check out the hottest, spiciest, most controversial charts and indicators and techniques that I highlighted for you this week. If you like this content, be sure to give the video a like, a subscribe, a notification bell, and more importantly than all of that, did you see that wicked live stream that Chad Shute put on yesterday for me, 2 days ago for you? This is a new thing we're trying out for Chad. He used to have this series called Quick Takes, and what I wanted to do was rename it Quick Takes Live and make it so that you can watch his streams, submit your takers, and have Chad give you real-time market quick takes on your trades, your favorite stocks. I think it's super valuable. He does unusual options activity. He's doing his relative rotation graph, his proprietary timing tool, which we've taken to call on the Profit Radar. And he's just giving really good ideas for folks trading out there. So be sure to tune into that. The replay is up on the channel now. Maybe we'll have a link to that in the description, and maybe even an annotation if we want to get real fancy. Maybe we don't. And yeah, that's all I wanted to let you know about. Let's check out some charts. Trend change is happening in Bitcoin. Bitcoin holders. It's been very exciting, and then devastating, and then exciting again, and then devastating again past year for you. Me along with you. But what have we been watching the past few weeks, right? The Heikin-Ashi candles. So as a quick refresher, and I'll refresh you every time, you probably understand them by now, but I'll keep refreshing. The Bitcoin Heikin-Ashi candles are very useful for spotting when trends change. So when we see green candles, long upper wicks, no lower wicks, that's an uptrend. It's a beautiful thing. We're all very happy during uptrends. Downtrends, when we're depressed and wondering why we're investing in magic internet beans, we have red candles with long lower wicks, no upper wicks. Trend change candles, long upper and lower wicks, which are then confirmed by a candle in the opposite direction. Very simple. So what are we seeing today? On the weekly time frame, which is, in my experience, a pretty good indicator of the trend shifting one way or the other, we had a trend change candle in Bitcoin. And this week, it's been confirmed so far. There are 2 days and 9 hours left in this candle, so anything can happen, by one of the classic uptrend candles. Long upper wick, no lower wick, green, following a trend change candle after a very long and very painful downtrend. This could be the start of a new Bitcoin uptrend, which will take us to new highs. Chris Cimorelli believes we will see new highs in Bitcoin by May. I think if we do begin an uptrend here, that is certainly possible. Because what does that have to do? Like, Bitcoin will have to move, that's even from the lagging price, we're at 43.7. By May, it'll have to move 61% in 3 months. Bitcoin has obviously not had issue doing that in the past. I mean, we can even take the bars pattern of, let's say we start a new uptrend, and let's say optimistically it's something like this uptrend. We'll take 3 months worth of candles, right? So from October to November, December, and then January. Let's call it early January. What if we saw something like this take place? Let's mess with the scales a little bit. But yeah, if we enter a new strong uptrend for Bitcoin, that could take us well past $100,000 by May. This is the most optimistic version, of course, because Bitcoin has some resistance here, some rising resistance connecting these two highs, not the most solid of resistances, and the horizontal resistance. If we go on the lower time frames, that one looks a little bit more clean. But this is what we're working with. So there are definitely a lot worse places to bet on Bitcoin. And with the help of the Heikin-Ashi candles, you can kind of tell if the trend's going to continue. So if a week from now we start seeing the Heikin-Ashi candle look a little bit more like this, or like this, and we start to break below this support, then we might be in for more of a prolonged bear market. But my money's on Bitcoin going higher this year. let's just take a quick look at Ether, my biggest bag. As you all have come to know and understand about me, we're seeing a very similar trend change candle. And we're also seeing just on the regular candles, kind of a trend break here. Now, we've come in a little bit this week. We have 2 days to close a little bit stronger, but this is what you do when you break downtrends. You break out. Let's go down to the daily. You break out. You come back down to retest, and then hopefully you continue on. So we'll see if that plays out, and then we'll just pop back over to the Heikin-Ashi just to see how it looks for the total cryptocurrency picture. Again, looking very similar to the Ethereum Heikin-Ashi chart. And then if we identify this, it looks like we're in just kind of a very long-term uptrend channel for this asset class. Now, if you've read the new ARK Invest report that just came out, I mean, they're predicting crazy valuations for the entire crypto market cap in the coming years. I don't think they're totally unfounded. I think this asset class is here to stay, and you have the best chance that you've had in half a year to buy in. So maybe consider doing that. Pop back to our regular candles here. Take a look at my favorite bag to hold, silver. Silver got me really excited because for years, and I'm talking 2017, this is one of the first stocks I ever bought was SLV. All right? I think I bought it like somewhere around here on this excitement. Going, oh yeah, precious metals. I'm reading a lot of stuff from some perma bears that say you should hold silver as a leveraged bet on gold prices going higher. I'm going to buy some SLV. And what did it do? Nothing. Mega crash during the pandemic. I forget when I sold SLV. I definitely didn't sell it for a gain. I might have been averaging in and then sold here. But then what happened? Silver and gold ripped during 2020. And I'm like, what was this move? This was from this daily close, or weekly close rather. It's a 125% move in a few months. It's incredible. So what's it been doing since then? Kind of disappointing, folks, myself included. So I bought into the hype in silver probably around this level before it really ripped, and then obviously I should have sold. But it spent the last couple of years just kind of consolidating. So we had this huge move, and then we've just been consolidating ever since. So we have this horizontal support that it has been very dutifully respecting so far. We had some dips below it, but they're always getting picked up. We have a couple downtrending resistance lines that we need to break. This would be the key one in my view. If you look at it on the weekly candle, you see lots of candle touches on this. And then we have a slightly more short-term downtrending resistance line. But it's becoming clear to me that this, we're coming into the apex of this triangle here, this short-term triangle. And if we take this support in the more recent action, it's not the cleanest triangle, but silver breaks above this handle, I'm going to say 25, and then picks up a little change, we'll probably see silver go all the way up to 30. And I think in an era of unprecedented money printing and inflation, if you think precious metals still have a place in this world, given the whole Bitcoin nonsense, you probably want to hold a little exposure to silver. I'm personally heavily invested in the Silver Junior Miners ETF. That's not investment advice. None of this is investment advice, by the way. But I think if you want to leverage your leveraged bet on silver, the Junior Miners are probably the place to do it. So that's just my take on silver. I think it's going higher. Let's look at the dollar. The dollar spooked me this week. It's got a kind of a rising support here that's pretty clear. Lots of touches on the weekly time frames. We go out to the daily, we see it even more. And we almost dipped below this support line again this week after lots of breaches recently. So I've kind of been speculating that we might see the dollar feel a little bit weak as we go on, especially if this support is broken. The reason I say that is because, well, inflation is still hot. It just came in at 7.5%. You probably saw a couple days ago. People's money isn't going as far. And just on a technical basis, you can see that the moving averages on the daily are kind of struggling here. They're very coiled. They're very prepared for a move in either direction. And I suppose if we see a really big overnight interest rate hike, which Federal Reserve Chair Bullard kind of suggested a couple days ago, then maybe we'll see some strength in the dollar and it'll continue this uptrend up towards 97 and 98. That could very well be the case. Higher interest rates would be good for the dollar, and it could potentially weigh on equities and so-called safe havens like silver and Bitcoin and so on and so forth. So this is just one to watch. Not much of a dollar trader, but I did find this interesting. And the last thing is kind of an outlier. We're looking at Spotify. So I kind of like Spotify as a buy here. So it's obviously faced a lot of controversy in recent weeks. You almost couldn't avoid it. But there was a bit of a divergence I spotted earlier this week after its earnings report came out. It did beat on earnings, and it did have a little bit of a fall afterward, despite the fact. But we're seeing bullish divergence on the RSI and the MACD indicators. And I just think this thing feels oversold here. I mean, Spotify is the leader in music streaming in at least the US right now. This controversy with Joe Rogan, yeah, it really it stole the show for a while, but I don't know. Spotify's a lot bigger than Joe Rogan. Joe Rogan's a big part of Spotify. And no matter where you fall on the issue, I just don't think that is enough to take the company down. And yes, the tech's faced a lot of headwinds in the past few months. But to me, I mean, if you like growth and you like tech, you almost have to love Spotify right here, because it's just kind of a gem. It actually makes money. It does really, really well. And I've been a customer for 10 years. I imagine a lot of people are in a similar scenario. It has that Apple effect where you get trapped in it. You know, I've built my library in Spotify for 10 years. It would be really hard for me to do that again on another platform. For all that cancel Spotify hashtag nonsense that was erupting all over the place, I would really like to know how many people actually canceled their Spotify membership over Joe Rogan talking to a couple doctors, or PhDs, however you want to call it, mixed with his dozens of conversations he posts every month with comedians, spearfishers, athletes. It's just a very small thing that kind of got blown out of proportion, in my view. So I think Spotify's a buy here. I definitely do, especially with this divergence. It's at least good for a trade. And with that, we're going to wrap up our chart wrap. That sounded weird. Thank you so much for watching. Be sure to catch up with Chad Shoop's Quick Takes Live. Really proud of how that came together. Be sure to keep reading True Options Masters, the greatest options trading newsletter in the universe. And I'll see you next week. Thanks so much, everyone. See you soon.